Hello everybody, welcome back to Your Property Podcast. My name is Michelle Cairns and with us we have got Saif Derzi. Hi Saif.
Hi Michelle, thank you for having me.
It's great to have you on, and it's great to kind of see your name popping up here and there everywhere, and I just thought let's get you on because you've been on a couple of other podcasts that I've seen and heard, and I thought let's have our listeners hear your story as well. So I know you've got a background in the pharmaceutical industry and you've moved into property, so do you want to just sort of tell people just a quick overview of how that happened?
Yeah, sure. So I very much come from an academic background. So kind of did a master's in pharmacy, and then obviously we do like a year's training. So that's kind of like 5 years end to end. So undergrad, master's plus training. I'll be honest with you, I don't know why I chose pharmacy. I just did. It was just one of these things, you know, when you're 17 years old doing your UCAS application, I kind of just went for it. And then quickly realized really sort of 2 years into the career, it just wasn't for me. I just found too much repetition in what I was doing, and I almost felt like a button pusher in a way. So I kind of thought, you know what, I'm actually going to do something about this, and I'm going to try and change things rather than just moaning about it, which, you know, a lot of people were doing at the time in terms of colleagues and stuff. You know, they weren't liking what they were doing. But I thought, let me take a bit of leap of faith. Let me do something different. And yeah, you know, parachute was off, and off we went really on this entrepreneurial skydiving journey.
And that's just, how did you jump into property? Because it's quite a different industry to jump to.
Absolutely. So the bridge for me was I got into business, but it was a non-property business. It was a healthcare related business, but very much, you know, took a lot away from that into property, because essentially what I was doing, it didn't really have anything to do with pharmacy. I mean, it was great that I had the pharmacy background, but more of it was I went to a lot of the UK manufacturers that were basically producing vitamins, healthcare supplements and pharmaceuticals, and said to them, look, there's all this business abroad that you're not exploring, the export markets, you're all focusing on the UK. I can help you open up doors without it costing you a single penny, and I just make a margin on top of your prices. It was a win-win situation, although 15 of them said no, and a couple of them only said yes at the time. Well, one of them only said yes to start off with, and then a few of them started to warm up to the idea. Because obviously, you know, I'm coming in with no background, no personal brand, no company brand, no nothing behind me really, just a limited company that I've opened up a couple of, you know, weeks back, and just being tenacious really. And obviously I was still young, but anyway, it was quite challenging for me the first year of business. And I always say this, you know, I ended up losing probably about 30-40 grand for basically my emails got intercepted, etc. But I sort of came back from that, and I think the second year in business that we were doing this for the company, we increased their revenue by 900 grand for them. And we made a tidy commission off of that as well. And that was kind of my first hurdle into this. And I thought, okay, there is a bit of a business here. So start to do that for other manufacturers, started to travel the world to like places like Dubai and stuff like that. They have healthcare exhibitions there. So basically representing these companies' products. And we just started to basically tie a distributor. So effectively, I was a facilitator, a middleman, tying the kind of distributors to the manufacturers. But to me, that was the first start of business, entrepreneurship. I basically started with nothing, and I created something out of nothing. And when I made a bit of money from that, I thought, what do I do? So it was a crossroads. I either go in, what most younger people try and do is obviously spend it and enjoy it, or do I go and invest it and sustain that money for the long term? Luckily, I chose the latter rather than the former. So I kind of was a bit more sensible in my decision making. And this is back in 2015. That's when I bought my first property, basically.
Wow, that's quite the entrepreneurial journey then. I'm sure lots of entrepreneurs will relate to the ups and downs and the financial highs and lows, of course, as well. But as you say, you know, all of these, you know, different points in your life have led you to now, and these are skill sets that of course transferable in property business. You know, whatever the actual commodity is, the business skills are very similar, and as you said, you use them along the way. So okay, so what was your first, so you've got some money to invest. How did you decide what to go with? Was it just sort of park it and, you know, a bit of cash flow, but you just the priority was to park it, or did you want to use it effectively?
So the first sort of 3 years in property business as such was more about me trialing, testing, doing different things just to kind of understand the process, just really sort of understand the mechanics behind how property transactions work, the business side of things works, etc. And the first deal I ever did was basically, and this was, again, it was just very much came naturally to me. I was living in Manchester. I saw what happened in sort of Salford, when they had Media City and everything else, that they were developing all this nice, shiny new builds. And I thought, well, why not I buy a secondhand property where the new build premium has basically been amortized and is basically been knocked off. So you're effectively paying secondhand pricing for something which, is going to be overlooked by some new builds, which are over here. So hopefully those valuations will pull these up. And that's what I did. I bought something that eventually I realized was actually off market, although I didn't realize at the time there was a property on the market. We offered on it. We didn't get it. And the agent then called me up and said, I've got a lady that's actually selling an identical property in the same block. It's not on the market yet. If you want to offer on it, I can send you pictures. So that just happened organically. I paid 93,000 for that flat in 2015. Nothing clever. As I said, just bought it from an agent. 2018, I believe, we refinanced it at 150,000. No refurb, no nothing. It was just a flat that we bought, rented out for £700 a month, and that was that. So that was the kind of taster into, okay, there's something here behind it. Even if you just did one of those a year, the capital appreciation in property is just massive. The income is just a bonus for me. It's more about the capital appreciation. Did about 3 other deals in 2017. So we did some student HMOs and dipped our toes into that, 2017. And then you kind of fast forward from 2018 to today, we've done over 170 property deals for ourselves. That is I'm not even counting for clients what we've done. And that's because we are very much, we're very corporate in our thinking, in terms of, I'm trying to always think, how can we do this at scale? And that's why I kind of understood the model and tried to scale it, rather than kind of just going for a smaller proportion of things and focusing on that specifically.
Oh, so did you say 117 or 70?
70.
Wow, 170. Yeah. And I mean, you definitely haven't gone for the kind of cookie cutter approach of just getting that first deal and then carrying on with single lets. You've gone straight up into HMOs from that. Do you want to talk to us about that journey then, from the first one up to 170, because that's quite a unique journey?
Absolutely. So there's lots of trial and error, right, at the end of the day. So I've tried everything. I've tried rent to rent, I've tried service accommodation, I've tried HMOs, and within that we tried to, we're just on the brink of scaling, and then we realized something was wrong, and then we kind of pulled back on certain things. So it's all trial and error at the end of the day. And we also tried new build development, commercial conversion. We did everything really. So we tried lots of different things to kind of have it all on our CV, in order to then make our decision and make our commercial mindset up on what do we want to kind of scale and go out. Because especially on the property entrepreneurial side of things, we almost throw so much stuff on the wall and just figure out what kind of sticks, rather than kind of just go with one, because we think, well, what if this doesn't work? So we're almost thinking, that mindset of what if it fails? So we try and do lots of different things just in case one of them doesn't work. But actually, sometimes you go back to focus is key. But anyway, so what we did is we tried lots of different things. The two things that really, really worked for us was single lets and building a portfolio of single lets. The reasoning behind that was it wasn't very operationally intensive to manage it. So we set up a sister company that was a management company. We had all the asset management in-house. So asset management in terms of the purchasing, the refurb, if we had to refurb it, and the refinancing side of things, that was all done in-house. And then we asset managed via basically the lettings company. So that's why we didn't do HMOs, service accommodation, all of this kind of stuff, because we couldn't scale that to a proportion. So we kind of kept it really, really simple, and simplicity allows scalability. And then on the flip side, we felt developments held us back. We felt new builds held everything, all of that stuff held us back. So what we got really good at is what we call trading properties. And this is why we did do volume. So trading was purely buying it, or being able to buy it right, and then selling it via auction or via an agent, whatever, and just constantly trading. So not necessarily doing a refurb or anything like that, just buying and selling, and just sandwiching, albeit a smaller margin, but doing that at volume. So that was a kind of key pivotal moments for us, is figuring out that model is the scalable side of the trading side of our business. This model is the scalable part of our investment business, which is a single lets, and we're doing them kind of in parallel together at the minute.
Okay, so when you refer to trading, is that the same as what people understand as sourcing?
Trading is no. So let me kind of break it down in a way. So let's just say, Michelle, you come through our website, which is called Property Buyers Today. You have either had a property that's gone through probate because maybe, you know, your parents have kind of left it for you as you are the executor, etc., and you're basically inheriting this property. You might have waited 2-3 years for that property to go through probate, and you've already in your head spent that money on other things, invested at whatever. And at that time, you then don't want to go through another 6 to 9 months on average to sell it on the market through an agent. And you're not looking for top dollar because you've not paid for it yourself. You just want to get the money out. So people come to our cash buying website because they want speed and they want certainty. So what they won't get is they won't get the price that they necessarily want in terms of the open market price, but we'll offer them speed and certainty. So we completed a transaction last week. It came to us last Monday. We completed on Friday. So that was a 5-day transaction. And that's what they get when they come to us. So if they say we need to complete in 2 weeks, we'll complete it in 2 weeks for them. And we take a lot more risk on by doing that. So we give them the certainty that it's going to complete. And when you think about it, if your back's against the wall and you genuinely need cash and all you have is an asset to sell, like a property, it's a very illiquid asset. You can't really sell it that, you know, and people can mess you around on the market with agents. So we give them the certainty and that's what they want. And in return, we're normally around 80-85% of the market value on average. So we get all sorts of things. Landlords that don't want to kick tenants out or have problematic tenants that will come to us. Just people that want to sell discreetly for whatever reason, people going through divorce, all sorts of scenarios. So they come to us as a cash buying company, we buy it quickly. Now we might buy it at 80% of its value. We'll then put it into auction, for example, and try and get 85-90% of its value, maybe on a good day, 95, depending. And that's what we're doing. So we're buying it and we're selling it ourselves directly, basically, into auction or into open market, and we're making a smaller margin.
Right, I see. So you're basically sort of like an auction house yourself, but because you have agreed to buy it, you've given that person the certainty. You purchase it and then you do what you like with it, and the easiest solution for you is just put it actually into auction, and then you can get a profit from that.
Correct.
Right?
And people are like, well, why don't they go to auction?
Yeah.
Auction still doesn't offer certainty.
Exactly. Yeah, that's what I mean. So you're actually offering the piece of certainty that the auction doesn't.
That's right. And the speed as well. So an auction typically it'll take you 3 to 4 weeks to market it and list it, another 4 or 5 weeks or whatever it is to sell it, and then it might exchange, it might not exchange, it might complete, it might not complete. Yeah. So people that really need that speed and certainty come to us. Now, as a result of this kind of business that we've set up, we get so many leads. You know, we get over 200-300 leads sometimes on a given month, and some of those leads don't work for us. So we have an investor club, basically, through our sort of Letco brand of the business, or Letco side of the business, an investor club where people want to just build a portfolio, but they don't want to go to agents and do all the hard work of trying to agree the deal and negotiate the deal and do the viewings. So we give them the deals on the table, albeit it's not as discounted as what we would buy it for, but they're still getting a good discount than what it would go to the market for sure, or even go to auction for. So we have a black book of some really good buyers that also act with speed and certainty, but they don't want to be spending thousands of pounds a month marketing themselves, having the sales and operations background. They want to just get the deals on a plate. That's what we kind of do. So we help people build portfolios, give them the deal on the plate. We help them manage it and asset manage it as well over the long term. Pretty much made for armchair investors.
And okay, so if someone comes to you with a property, they just want the cash, but the speed and certainty is more important than the price. Okay. Yeah. That. In my mind, I'm thinking, wow, to get that amount of speed and certainty where you're talking about a matter of weeks of completing, then there has to be some sort of huge discount off, quote unquote, the market price.
Sure.
So is there a kind of set rule that you've got? It's like you do your due diligence, whatever you think it is like knock 25% off, or how does that work?
Yeah, it's a really good question. So basically we've built this over time. This has never been perfect. It probably still isn't perfect, but we basically built an underwriting process. And this is why we are so specific with what we buy. So we only buy residential properties predominantly. That's our main niche. And the reason is if we start to go outside of that, it starts to slow us down. So with a residential property, we can underwrite a property in easily 20 minutes. So if you send us a property, we can get back to you within 20 minutes with an offer as to what we'll pay for it. Now, we do have software that we use, but we also use lots of different data points. So a lot of those data points probably doesn't differ too much to what people use on a day-to-day basis. we've just locked that all into a process.
Yeah.
Plus we've got software, bank grade software that obviously some of the banks use to do their desktop valuations, etc., that we would use on top of that. So we layer things in. And we basically have one or two people that would underwrite the deal as just to give that kind of human interaction as well, because software doesn't do everything for you. So we have lines of defense within that. So we've got layers of tech and software and data points, plus we've got one or two people as lines of defense, and that's how we kind of do it really. But I enjoy doing that as well. That's a big part of what I like to do and enjoy doing it. And as I said, realistically, any residential property within England, so we don't really buy in Scotland. Wales is kind of hit and miss, but generally speaking, we try and avoid Wales. But any properties within England, up and down, we're generally able to buy.
So, but that gives you that process gives you a desktop valuation, if you like, and then how do you decide what it's worth to you?
Sure. So we are not looking at development value. We're not looking at once it's optimal. We're looking at what is that property worth as of today. So if you went, Michelle, and tried to put that property into auction or put it into open market, what would it sell for? So we call the auction valuation the 4-week valuation, i.e. if you need to sell it in 4 weeks, what would be the valuation? The open market is more of a 180 day to kind of 360 day, depending on that. That's the kind of valuation. We always go off the auction valuation or the 4-week valuation. And that's what it's worth to us today. And we'd normally go off a percentage of that. So usually we're about 15-20% off of that. But sometimes we like the area, we like the property, we like the deal, whatever it is, we could be a bit more. So it very much depends on people's circumstances. One thing we always say to people as well as, from our perspective, we're not trying to push people to a service that doesn't necessarily work for them. So from 100 phone calls, we'll get 5 or 6 of them might work, and then 3 of them actually end up becoming a deal, because a large part of the audience that kind of gets attracted to our proposition don't want to give away the equity. And that's absolutely fine, because we know our service is not for everyone. So rather than push people down the service and then they end up getting cold feet, whatever, after a couple of weeks or maybe a couple of days, depending, we'd rather at the outset say, look, do you have 6-9 months to sell your property? Do you need the certainty? Is your property mortgageable? If it's like, yes, the service isn't for you. Maybe keep our details in case it falls through a couple of times or your chain breaks or something like that. But we are not your first point of call. We are your last point of call in those circumstances. If you said yes to it is unmortgageable, we're probably your first point of call. If you said yes to, 6-9 months, I can't wait 6-9 months, we're probably first. You see what I mean? But if you don't have any of those circumstances, you're probably best going to a local agent.
Yeah, it depends entirely on that person's motivation. How important is that speed and certainty to them? Okay, so so you've got this, I guess, the option of putting it through the auction, or you've got your investor club as well. And does it go to the investor club first, and then if it doesn't sell, it goes to auction? How does that bit work?
To be honest with you, and that's a good. Everyone says, how do you allocate properties? Within kind of your multiple businesses. We are very fair with everything that we do. So for me, I don't want to put everything into auction and then not service the investor club, because all of these are trading businesses for us as well. And obviously, if we have done that, then no one will stay in the investor club. It's just a waste of time, right? Because a lot of those clients are retained clients. So they probably paid £1,000 plus that just to be a retained client, so they can actively get those deals. So from our perspective, to be honest with you, it very much comes down to trying to spread everything as much as possible, where possible. Now, when you look at the auction market as well, not every property works for the auction market. So generally speaking, auction market doesn't like certain things, like tenanted properties, kind of shies away from it. What the auction market likes is the classic homes under the hammer, needs a full refurb, it looks absolutely terrible. That's what the auction market loves. And that's probably what not the investor club probably doesn't want that.
Yeah.
So we kind of allocate things accordingly. So if it's tenanted, it's got good margin, it's in a good city like Nottingham, Sheffield, Leeds, whatever, that will always go to the investor club, because that's where it's going to be best suited. If it's a really, really rundown house in the middle of nowhere, or whatever, and it needs a full amount of works, we'd probably go more towards the kind of auction route, because it kind of suits it better.
Yeah, that makes sense. And do you find at the moment with your investor club that people are looking for a certain type of property or a certain type of deal?
Most of our so this is the difference between our investors and the majority of the rest of the investors out there. So our investors are not coming to us being very specific, like, I want a property within these postcodes. It's not an emotional decision for them. They're coming to us saying, we've got 100k to invest. This is a pension pot for us. We need to see a return on our investment. So it's very much an economical, numbers driven decision. And from our perspective, we're saying to them, that's fine, leave it with us. Now, the property can be technically anywhere because we're managing it, we're asset managing it for them. And just to give you an example of, because people are like, well, what does asset management actually mean? Asset management is basically trying to effectively manage the agent, as people call it. So managing the agent. So have the rents been collected every single month? Have you had rent increases year on year? Because, rather than waiting 10 years to do a rent increase, can you not do a smaller rent increase every single year consistently? Can you maximize the value of that property by getting a different tenant type? So for example, a recent exercise we've gone through is we have a lady that has a property with us that's rented out £600 a month. We've just basically let her know we had a guaranteed rent housing association provider come to us recently with a mandate for that area and said, we're happy to pay £900 for that property. No arrears, no voids, no arrears, no nothing. And we basically said, look, I think we need to give the tenant 6 months notice. The tenant was on a rolling contract, so they were going to be looking at buying something anyway. So it was kind of like in a way, it kind of all worked out. So we said, look, I'm not going to give you 2 months on a Section 21. We'll give you 6 months, more than enough time to find a property, and we'll help you. But that landlord's all of a sudden gone from £600 to £900. Yeah, that's a 50% increase that they got. So we're helping people and landlords to actually increase the amount that they're getting from these properties. Because don't forget, as an agency, that helps us because we're on a percentage basis as well. So, we're finding win-wins within that space as well. So that's basically what we do.
Right. Okay. Well, for people who are listening and they are looking for their own properties, maybe they're on Rightmove searching for deals, or maybe they are a source themselves. The idea that you're getting so much volume of these like great deals through your books, it must be, they must be a bit envious. Are you not tempted to buy some of them yourself? You must see some absolutely fantastic deals.
Yeah, absolutely. And the thing is that, sources are not necessarily envious because we work with them, we partner with them. So for sources, a big part of their business is getting the deals. So sources come to us and they say, well, if we can focus on the investor side of things, could you supply for deals? And we do, we work with, there's lots of sources that come to us and work with us. So it's more of a partnership type model. Right. Because as I said, we're open for business, whatever it is. If they've got the clients, we've got the deals, absolutely, it makes sense. And everything's about managing deal flow at the same time. So we would never compromise the deal flow to, for example, our investor club. So we always find a balance between everything. But generally speaking, we do buy deals. So that's one thing that we set this whole business up for ourselves to buy. And as we started to grow and get economies of scale, we then realized not everything works for us. We can't buy everything. That's when this started as a byproduct where we started to build portfolios for other people. So we are very much working on the same wavelength as everyone else. We'll buy stuff for our own portfolio, we'll buy stuff to sell, and we'll basically put deals into the investor club as well, or as I said, to sources. So yeah, as I said, we kind of control the deal flow. So anyone that needs deal flow works quite well with us, basically.
Right. And you say so the ones that don't work for you directly, you'll put in the deal in the club, but are there leads that come through? Like, are you laser focused on like, this is for us, and if it's not, we just disregard it? Or do you look for any kind of creative ways, or is there something you think, wow, there's a big plot of land here. This is not one for us, but we can see the potential. And do you do anything with those creative deals?
Absolutely. We look at things from a 3-dimensional point of view all the time because we spend a lot of money on marketing to get these leads in the first place. Now, there could be a deal where it's a £1.1 million house, and there's not really much that you can really do with it. There's a massive stamp duty that you're going to have to pay if you're going to buy it. Not really much. Funny enough, we have referred that to some of the luxury real estate agencies as well. So I know a few people that work there, didn't really get anything out of it, but I just referred it on to them because why not? But we did a deal in 2021, well, 2020/2021, which was the deal that we won Property Investor of the Year for yesterday, well, Property Trader of the Year at the Property Investor Awards. And that was very much, it was kind of still right in the middle of lockdown, September 2020. We had a couple that basically were going through divorce. They had to sell. They had this 3.5-acre site. They had outline planning for 26 houses at the time. They had it on the market for 2 years at 1.2 million, and it didn't sell. Just a really bad agent that was on it. And they got to a point of they needed to sell, and they sold it to us. We paid £475,000 for something that we had a RICS on at 975. So we paid 50 pence in the pound for that. But bear in mind, they had paid £60,000 for that land, God knows when they bought it, basically.
Yeah.
But they were coming out this with a massive profit. We were coming out this obviously with a profit, but it was, who else could complete a 3.5-acre site without investigations, without searches, without anything? In a month, basically, we completed that whole site. 475 grand in their bank, done. We covered their legal costs. There was no agency fees. That was net to what they received, and it solved a massive problem for them. And also, to be fair, we did take a risk because we're still in that period of uncertainty, lockdown. No one knew what was going on. But, as entrepreneurs, we've got to take risks. And we sold that site after, I think we actually completed on it in June 2021. And we sold that at 750 grand via auction as well at the time. So it was a good uplift for us. They obviously got what they wanted out of it. They got their money. They split them. They went in their separate ways, and everyone made money. And the developers that bought it from us, I think they had offered us 1.1 million previously, but that was subject to full planning application. We didn't want all of that. We wanted speed and we wanted certainty. What we offer to clients, we want as well from buyers. So we decide to take a lower amount just to get deals done, and that's what I say to people. We're not greedy. We're not here to maximize every single deal. We're happy to sell things at trade prices as long as someone's going to offer the speed and the certainty that we need.
Yeah, and that couple, they were free to just put it in auction themselves. But again, even in auction, things, even if it exchanges, it still might not complete.
Yeah.
And, so it might not sell in auction, then they've got to wait for the next one and all the rest of it. I guess they were just at the end of their tether with it, and they just wanted to get rid.
We bought it in September, October 2020, which was, even if they put it in auction at that time, they probably wouldn't have got any buyers. And we sold it in June 2021, which obviously was, there's a lot more certainty at that point. There's a lot more money in the system, etc. So sometimes if you time things right by buying when there's a lot of negativity and then selling where there's a lot of positivity, that was pure coincidence, by the way. I did not time that at all. It was just coincidence. Then, you can make money. Let me tell you about this situation, Michelle, that happened where people made money off us as well, because this goes both ways. We sold a property in, I think it was February this year, in auction. It was a 3-bed semi-detached house in Croydon. We got a decent price on it, 329,500. Probably wasn't exactly where we wanted to get. We wanted to get to about 340, 350, but it was nevertheless a profit for us, and we move on. The guy that bought it from us was a property trader as well, so similar to ourselves. He exchanged contracts on it. He asked for a key undertaking in 8 weeks to complete, which I knew basically he was what's called doing a back-to-back. So he was looking to exchange with us and sell it to someone else. And I was fine with it. As long as we're selling it and he's buying it from us and we're getting out, we're okay. He sold it 2 weeks after our auction, and this was genuinely due to timing. Our auction fell on a very negative week. I think it was an interest rate hike week and all the rest of it. 2 weeks later, there was positivity. He sold that same property at Savills auction for 364,000. So we made nearly 34 grand in the space of basically two weeks, effectively. Now we're talking 8 weeks to get the money, but that's my point in terms of timing as well. Timing is absolutely crucial. And people could have said, well, we could have sold it at auction for 364, but we sold it at 329.5 on the day that we did. So just goes to show. Yeah, exactly.
Yeah. Well, talk about timing. We are recording this on the 21st of June, 2023. How are you seeing what's happening for you in the market at the moment? So what's your feel of what's going on? Obviously, we've got more interest rates rises there, and predicted next week, I think. So what's
but there's two schools of thought here, right? So there's the first school of thought, which is basically if I'm looking at things with a property trading hat, so I'm buying and selling. And there's also another school of thought, which is if you're looking at it from an investment point of view, very much long-term pension building. Let's talk about investing as a first point of call, because we are also property investors ourselves. When I'm looking at things from a property investing point of view, it's probably one of the most exciting markets to be in right now. And I'll explain why. There is a lot of negativity. There's Section 24, there's interest rate rises, there's EPC changes, there's 1,000,001 things happening right now that's pushing out the smaller first-time landlords, accidental landlords, whatever you want to name it. However, where the real exciting big picture kind of output comes in, and I've been speaking to some pretty big institutions that are basically looking to try and scale really big, ambitious property portfolios in the UK. We're talking about 10, 20, 30, 40, 50,000 houses. So huge. So these guys have done their research on the data. They feel like right now in the UK, it is absolutely ripe to be able to become an institutional investor and hold stock. And that's what the government wants. So yes, there's a lot of negativity. Yes, we've got interest rate rises. That could be permanent. That could be temporary. Who knows? It could be that interest rate rises for a while and then it either comes back down or stays where it is. But fundamentally, if you can set up a model that works over the long term and you can get over this short term, so you need to survive this short. This is the key to this, right? If you can survive the next couple of 2 years, 3 years, maybe, by basically being able to service all of your debt that you've got in your properties. And I'm not saying you need to thrive, but the thriving will come after 3 years. You will be holding one of the most desirable commodities in the UK because you are seeing how much of a shortage there is in rental accommodation across the board in the UK at the minute. So yes, it's very, very negative on the short-term outlook, but the long-term outlook is extremely, extremely positive. And for anyone that has that prospect to look at, so over that long term, it's so exciting because you're going to be holding a really, really valuable commodity. Trust me when I say this. So I think rents are not only going to keep increasing, but they're going to start to go to some pretty high levels because wages are increasing. So that allows for the rents to constantly go up. Because we've got some areas of the UK where, you know, people pay £500-600 a month rent for a 3-bed terraced house or a 3-bed semi. And in the US, that's unheard of. So in the US, that equivalent should be around maybe $1,400-1,500 a month. So in the UK, you probably won't see those rents anymore. Those rents will start to become £900, £1,000 as the absolute norm. And I think the £1,000 to £2,000 range is probably where you're going to start to see a lot of the average rents end up getting to. And that's because once institutional investors are getting in, and they are getting in, they will start to push rents up because they control a larger part of the market. And the reason why we work with a lot of institutions is, again, we control deal flow. Institutions come to us to buy. So we're working with an organization that has basically scaled a 2,000 property portfolio. Same things that everyone buys, terrace houses, freehold houses, you know, 50 to 150,000 pound style houses. And that's how I know that a lot more institutions are getting into this market and wanting to scale. So that's just to talk about it from a point of view of an investment. As a trader, are we being a bit more cautious? Probably. But at the same time, every week at the minute is different. And as I said to you, honestly, I could sell the same property 3 times over in a different week, and it will sell for 3 totally different prices. So yes, we're being cautious, but the difference between now and 2008, right, is 2008 was an actual liquidity crisis. So that's when you saw things just drop off. What's going on right now is liquidity is still very much in the market. It's just higher. It just costs a lot more. So this is why things are happening much, much slower. So it's very much probably getting to a point of just plateauing as opposed to this massive fall that everyone is kind of expecting in a way. So yeah, hopefully that answers your question.
Yeah. So it's basically, as long as it works today, just hold for the long term. And as you said there, you know, for you, the properties aren't really about the cash flow. If you're going to hold something, you can buy something for the long term. So you've got the capital appreciation. So yes, I think if people want to look for high cash flowing deals, probably single lets aren't the answer right now. But you know, you've got that strategy there if you want to pursue it. And then, you know, yeah.
One thing I'll say though as well is this environment, if you can build a portfolio in this environment, it will last forever in reality, right? And I obviously say that with a pinch of salt, but I'm just saying in general, building a portfolio a year ago was way too easy. So building a portfolio a year ago was fine, but that doesn't mean you would have survived right now, or you would survive right now. Building a portfolio right now will mean that you will survive. So it forces you to get better cash flow. It forces you to start looking at different strategies. And I mentioned we scaled our portfolio of single lets. You know, we are also looking at how do we improve cash flow? As I said, can we do social housing and get guaranteed rents in? You know, maybe we need to start looking at service accommodation on some of them to improve their cash flow. So we are having to really sweat the assets as much as possible. And I think this environment is going to help people create a much better portfolio because they're working harder to create that, rather than a year or two ago where it was just so easy to do and people just sat back creating portfolios, but not foreseeing what's happening right now.
Yeah, and at the moment, are you seeing, because of the interest rate rises, that is, you know, more people are coming to you just needing to sell, like landlords, just this doesn't stack anymore, too much going on, I can't, you know, it's not worth it?
I mean, I think you'll be surprised. So we get a lot more. So the difference between what a lead is and what a deal is we're getting a lot more people inquiring, but we're still not getting people actually agreeing with the deal. So it's like, okay, I'm now exploring my options of I'm needing to sell or whatever as a landlord. You're absolutely right. But they're not wanting to take that lower amount, and they're not
Yeah.
wanting to sell. So the motivation is not kicked in, but it's certainly on people's minds, 100%.
Yeah.
And I
Yeah.
think
When it comes to the crunch, they realize they're not as desperate as they thought they were.
well, this is exactly what you've just said, is exactly explaining the point of there's plenty of liquidity in the market. It's just a bit more expensive. If there was no liquidity in the market, that desperation or that motivation will be 100%, and they'll be like,
Yeah.
we'll take whatever we'll take 80% or 85, whatever it is. So there is still not enough motivation in the market, in my opinion, at this stage.
That's interesting. Okay. So what's the next 12 months hold for you, do you think?
But I mean, we just want to enjoy what we're doing. So we're building a really good team out. We've got about 15 members of the team at the minute across the different departments and companies. We're enjoying trading. So we are trading. And this is quite, even though people are like, it's a difficult market, it's the absolute best market to trade in, because when you get these ups and downs and swings, if you can buy properties on a down week or a down month from someone because things look doom and gloom, great. As long as you've got the foresight to see beyond that, and then sell it on an up month or up week, whatever, then the trading conditions right now are absolutely brilliant. And likewise, if you're looking to buy things from an investment point of view, now is a really good time, because people are thinking, let me wait for a crash. There probably isn't going to be a crash. But I think if you can pick stuff up week to week, whatever, if you can pick stuff up on a bad week, just go for it. Don't overthink it and think, should I wait for this? No, just go for it, because you're picking up a good deal anyway.
And it might never happen. So you just be waiting and waiting, then you've lost the opportunity cost of, the getting the deal well, and then it could go up, and then.
I said to people, Michelle, as well, honestly, people are like, do you think we're going to have a recession? It's like, people have been talking about recession to me since 2015 when I first started investing, and we've done 170 deals to date. So, look what's happened. So I think don't time the market. It's just, there's no point. No one's ever timed the market well anyway. Just go for it, and just, in equities and in terms of investing, there's a saying that people say is pound cost averaging. So rather than trying to buy at the bottom and sell at the top, just buy every single year consistently, whether the market's up, down, sideways, doesn't matter. You'll average out your returns and your prices that you've paid over the long term.
Yeah. And the other one, time in the market, not timing the market as well. So
Perfect.
That's important. Great. Okay. And what about your investor club then? Is that at capacity, or are you looking to take more people? I'm sure there's people going to be listening and thinking, right, well, I can't be bothered with all this sauce malarkey. Can I join your club?
Yeah, absolutely. So we've got a form. So I'll drop it to you if you want to.
That'd be
Put it in
great,
the show notes. They'll fill out the form, so we'll understand more about the investor, what they're looking for. They're looking for yield, they're looking for discount, etc., the regions, and then basically we'll set up a call with them. So we're not all about just trying to automate everything. We also want to have conversations with people and have the human element of it. So once they filled that out, we'll have a conversation with them. We'll explain what the club's about, how we can help them, and because I don't do mentoring and everything else, but as part of being in the club, you get a strategy call with me. So once you become basically a retained client, you will get a half an hour to 45-minute strategy call where we discuss, right, let's build your strategy and look and basically define what a deal looks like. So when we do get to a deal, we know that this fits your criteria. So that's what we do as part of you being in the club.
And is there like a limit to how many people are in, like one in, one out, or is it just based
No,
on?
not necessarily. I mean, we everything's about balance. So we have to balance the amount of deals that we have with the amount of clients. But one thing we do is we always say to clients, if we don't find you a deal within 3 months that fits your criteria that we set, you can have your money back. There's a money back guarantee. So we're not in it to try and string people along or anything like that. It's very much a case of it forces us to find you a deal within 3 months, guaranteed, or your money back. Simple as that.
I guess people are looking for different types of deals and all over the country anyway. So
exactly. So, and it's a small commitment fee that people need to basically, but it's really just more of it sits in our client account. We're not using that money until, that they actually commit. So, yeah.
Fair enough. Great.
Cool.
All right then. So where can people find out more about you and what you're up to?
I'm pretty active on LinkedIn and Instagram. So just my name, Saif Derzi, that's Saif, and then surname is Derzi, Derzi. I'll drop you the links if you want as well, Michelle. And I look forward to connecting people. I always say to people, don't hesitate to reach out. It's always good to connect with people. I may be a bit busy at certain times, but I'm always happy to try and, get back to everyone at a certain time.
Brilliant. Well,
Cool.
thank you so much for your time today. It's been absolutely fascinating, and wish you all the best with the with business.
Thank you very much. Cheers, Michelle.
Thanks very much. For anyone else who is not yet a subscriber to the YPM magazine, click the link in the show notes for your free 30-day trial. See you next time, guys.